Good morning. This is Ken Long from Tortoise Capital Management with the review of the charts of interest for July 4th, 2011, Independence Day edition. What I've done this week is highlighted in blue the price level from the market swing high on June 1st, and then showed the blue boxes really from the high to the low, and that gives you the trading range really for the month of June. In some cases in Caterpillar, you'll see that highlighted in green is the price where Caterpillar has exceeded the high from June 1st. And this will give us a chance to very quickly assess market leadership in these various sectors and stocks based on their performance over the last 30 days. And what you're going to see repeatedly is that excuse me, is that the defensive sectors and large caps have really pulled ahead of the rest of the market, and that's sort of a combination of a flight to quality, but also a desire to have some equity risk, and so the defensive sectors are really dominating right now. And so we'll just do a quick review and see where everything is. In previous weeks, I've evaluated the PPO in terms of red, yellow, and green based on how that indicator is looking, but in almost every case, what we have are opening jaws. This looks like a little dragon mouth here, and in every case, the jaws are open and moving up, and so that looks consistent across the board as a market turning point would suggest. And so I've not highlighted them as green. Just want to concentrate on price action right now. So we have Alcoa and Caterpillar. Both Alcoa is just through its 50, still has a ways to go till its swing high. Caterpillar, you can already see, is more technically advanced and has broken out already, and is coming off a nice move from 95, and that doji, perfect move already. Leadership being exerted once more. Boeing lagging behind Alcoa correspondingly, so you can see three different conditions here between Alcoa, Boeing, and Caterpillar. Cisco in the midpoint. Chevron, we'll see the energies themselves are generally around halfway. Chevron, though, is showing leadership in the energy sector, so that's one to keep an eye on. DBA at the bottom of its trading range. Blended commodities, combination of the weakness in energy and agriculture accounts for that being low. EFA and EPP are both pushing the upper boundaries of their 1 June high, so they're ready for a breakthrough. What I like here about Brazil and Latin America, Latin America is actually better than Brazil because it's had 2 days above its 1 June high, but Brazil is already ahead of EFA and EPP, for example, and has made a really nice move. We see that reflected in the quality reports as well from the weekly report review. Intel among the techs has broken above. Russell small caps right at their boundary. Johnson & Johnson's made a nice move off its 50 and through its 20, and defensive play right testing a triple top here. Johnson & Johnson looks good. And now the three dominant leaders here, all coming from the consumer discretionary area. Kraft, which has been 4 days above its 1 June high, and then excuse me, Coca-Cola 2 days with a strong move on Friday, and then the single best symbol in the Dow 30 and ETF 30 for that matter, McDonald's, which has been above its 1 June high really for 10 days and had a little pullback and then started its resumption again. So it's clear sailing for McDonald's. That's how you identify leadership. Mid caps right at their boundary. Microsoft is now a tech leader. For the last 2 months it had been a tech laggard, but we can see on the 30-day quality report and in this chart quite clearly that Microsoft has found its legs and is starting to move. Silver, the volatility is just about dried up. I like it above 32.5 if it can hold here, but you can see that all the volatility is gone now that the speculators are out. It's in this little downward channel, but if it can hold this doji, that looks interesting and good. Oil bounced back a little bit from its surprise sell-off when oil was released from the strategic reserve, but it's still at the midpoint and holding back the energy sector. The VIX, after flirting with disaster, the market had a nice recovery. You can see how that was reflected in the VIX getting absolutely crushed. Walmart, midpoint, has room to go. I think it's about 2 weeks behind Microsoft in terms of where it is in that little business value cycle. I'd look for more strength as Walmart plays catch up. Looking at the XL series, materials are above the waterline. Energy and finance still lagging, but that is actually not a bad move for finance considering it's been horrible for so long. AXP and JP Morgan are the ones to watch in that sector. Industrials and utilities have been just extraordinary on an intraday basis for trading. Not a great swing trade, but we can trade that on an intraday basis for sure using frog techniques. Industrials, healthcare, and consumer discretionary are ahead of the game. It's surprising to me that staples have lagged. I think that there's an opportunity in there for some more gains as it heads back up to 32. ExxonMobil lagging slightly behind Chevron, but slightly ahead of oil. So that's another potential energy sector winner. So just a quick look, looking at relative price strength through visual means and taking a look at how the market has turned here in the last 5 days to identify which are the sectors and stocks that are leading their way out. I think you'll see it's the staples and large caps and the old reliable companies like McDonald's, Coke, Kraft, and Johnson & Johnson. So, Ken Long from Tortoise Capital on Independence Day. Keep your powder dry and cherish your freedom.